All right, welcome guys to the third episode of the SteadyStack podcast. Today we have ObsidianApex, our third guest. Super exciting stuff. He is a NeoTokyo citizen who's traded all sorts of financial instruments from the U.S. equity index, the S&P futures, and different tickers like that. He's also traded a little bit of precious metals and energies only when it's right. And we'll get more into that throughout the podcast. Super interesting stuff. Make sure to watch all the way through. A little quick update on how we're going to be running the episodes. We're going to be splitting up the interview and the weekly recap into two different episodes. We have a few team members that are going to be working on that to step it up a bit and kind of recap everything to a T. So with that all being said, let's get into the interview with ObsidianApex. Welcome.
Thank you. Thanks for having me.
So pretty much we're going to be going through ObsidianApex's story, strategy, and success. And we're going to be sharing pretty much his knowledge throughout his professional career. So question about your story. Trading options. How's that gone for you?
Well, I don't do it anymore, really. I'll sometimes when something is extremely, in my opinion, like undervalued, I'll just buy some really far out calls on it, just because you can get a lot of bang for your buck if you can, find something that you think will go plus 40 to 60% over a longer period of time. So I think I only have one options position open out of all my damn accounts right now. And I think it's Alibaba. I want to say December expiry, 150 strike on some calls. And I think I bought those back when Baba was at like 70 or 80 or something like that. Kind of bullish on China long term. And again, these expire in like December, so I'm not too worried on that. Not overexposed at all. But so before I traded futures, I traded options quite heavily. I really probably blew up a full account on options, and it just didn't really fit my risk parameters. And kind of what I want to talk about that is like as I wrote to you before this interview, is like it was too stressful for me, knowing, especially like I traded a lot of really mega cap US stocks, right, on the options side, and I traded a lot of Tesla. And because it's fun, right?
Yeah.
Like that's kind of what you want to trade options on. And too many times did I have and I always traded around like 1 to 2 week expiry around the current price of what it was at. So like it moved very heavily, whether the underlying or Tesla went away from my strike price or went towards. And the amount of times that the market would close, let's say on like a Tuesday or something, and I would be up 50% on my options premiums. Elon Musk would tweet something or whatever, and then Tesla falls like 5%, 10% pre-market. And on Wednesday morning, before the market is even open, I just know that it's going to open up and my contracts are not going to be worth anywhere near plus 50%.
Yeah.
And there have been multiple times, especially with Tesla, a couple times with, I want to say NVIDIA, where I was up pretty massive on my positions. And then all it took was, post-market, pre-market to the next day. And then at the open, I couldn't even sell for a profit, which was frustrating for me. And for anyone who doesn't know, that futures trade basically 24/7. I mean, we say 24/7, but it closes if you're on Pacific Standard Time, like myself. It closes from 2 p.m. to 3 p.m. every day. And it depends what futures you're trading. But again, I mainly trade the ES, NQ, and RTY, so U.S. equity indexes. But I can manage my positions very, I wouldn't say easily, but more effectively when it comes to futures. So just because the market's closed, it's not going to blow through my through my stops, right? Which
Gotcha.
is really the main reason why I went from options to futures.
Yeah, you don't really have much control over the market open that next day. It's kind of, especially with Tesla, really, Elon tweets one thing, it changes the entire outlook. Okay, well that's it. So you went from options to futures, and obviously you've found much more success with futures.
Yes. And I know a lot of people, especially in the Steady Stack Discord, like the whole technical analysis thing. I like it. I don't swear to it as my Bible. I really, my charts normally look pretty clean. I have like the 50 exponential moving average and the 100 simple moving average. And I really only trade off of like the hourly, 4-hourly, and the daily chart pretty much. I'm a swing trader. I don't really, especially now, like, of course I used to try to scalp a few ticks here and there, but it's just too stressful for me. Like it just feels like you have to look at the screen all the time, which I don't like. I like getting in my positions after I've let one of my setups come into place, set my take profits, set my stop losses, and kind of just let it play out. Nothing too crazy automated. Like, I am still a discretionary trader. I make the trade, or I enter my position, but the exit typically is quote unquote automated, which it just, all the brokerages allow you to do that now, or all the actual trading brokerages allow you to do that now. But the S&P is very respectful to technical analysis, is what I would like to say. Is they really, the basket of the S&P 500 stocks that we can trade is they respect the moving averages, they respect Bollinger Bands, which I don't use, but they do respect them. They respect different like technical analysis levels. So if you're someone who's super into TA or technical analysis, I think trading the US equity indexes could be beneficial for you, because like trading Apple by itself or trading Tesla by itself is like, I mean, shit, you throw these moving averages on and it just blows through like 4 of them straight,
Yeah.
And it's like, okay, well, I read online that, if I use the 9 and the 21 moving averages on a 15-minute chart, like I should be able to trade this. But then you try it out on a single stock and it doesn't really work. I find trading the ES a lot more peaceful than trading single stocks and trading options on single stocks.
No, for sure, and that definitely has probably influenced your strategy. With all that being said, how has that shaped your strategy today, and how does that play into how you protect yourself when entering these positions? Does that correlate with your strategy at all?
Yes, 100%. So pretty much all, and what's a lot easier for me now is when you're trading CME futures or Chicago Mercantile Exchange futures, like the normal futures that people trade in the US, right, is there's only so many you can look at. Like, I can't just siphon through a ton of microcap stocks and choose which ones I want to trade. Oftentimes me as a futures trader is like, I'm sitting on my hands. I am not clicking any buttons. I'm not trying to overtrade, but granted, it's taken me years to find that, right? So pretty typical strategies that I like to use are more like horizontal lines of support and resistance. So I don't typically like to draw like diagonal channels, too many diagonal lines and things like that, because the moment you change the angle by 1, 2, 3 degrees is your price points have completely changed. And I don't necessarily like that. So I typically look for things like where it's found support or it's found resistance 2 to 3 separate times at a very horizontal line. And then next time it's around that area, if we're looking at support on like the S&P futures right now, we could see a support line of like 4,100, and it's kind of tested that 3 times down. If it gets back to that, which would be a while from now, right? We're trading at 43.60. If it gets back to that, like, I know that I can take a trade there and I can, if it breaks through that support level, I'm only risking whatever it is to break through there. I would set my stop loss at probably like 40, 70 or something. And if it breaks through there and hits my stop loss, it's good. Like I'm out of the trade.
Yeah.
But the fact that it's bounced off this support 3 times already is there's a high likelihood in my strategy, right, that it will go up and through that, or I guess away from that support. And then I pretty much will just trade in like the horizontal channels of support and resistance. Like, and I try to minimize my downside as much as possible. I try to get in positions where I know. I think this is very, very key for beginner traders too. Like, at what point are you going to know that you're wrong, right? Or that your thesis, your trading strategy is incorrect? I need to know at the second that I get in that trade, which typically is done with a stop loss, right? Is where am I incorrect? And then typically now, I mean, I used to let my positions run. That was also a thing with options too, is I'd be like down 80% on an options contract. I'm like, well, shit, I might as well just let it run to zero because you're down so much. But now with like me trying to practice preservation of capital is I only take positions where I know that my downside is not very large, but my upside is pretty large. I used to try to mess with the numbers of like, 3-to-1, 5-to-1, 10-to-1 risk to return ratio. I don't really compute it like that anymore. I just because that got me into trades that I probably shouldn't have taken back in the day. But now, like, I just make sure that I can get, at least 50 points on, and points is like the dollars on the S&P, right? If I'm going in at 4,100, I want to at least exit at 4,150 on a S&P futures.
Yeah.
But I'll typically give it 20 to 30 points to run on a stop loss. And then the moment it's like 20 to 30 points over my entry, I'll set it to just above break even. And doesn't normally hit there if I'm kind of managing my position correctly, but yeah.
Cool. Do you ever use leverage?
Technically, yes. So I don't want to say all, but CME futures, if you're trading on a normal retail brokerage account, which is what I trade on, you will use leverage to trade futures. So the S&P, the S&P futures right now is, depending on brokerage, but is around, for one contract, you need to post the good faith deposit, which is the initial margin, right, of $13,200 for one S&P contract. The beauty of these is that you can trade the micro ones. So micro S&P, micro NASDAQ, micro Russell 2000 is, it's like MES, MNQ, and I forget what the micro RTY one is. M2K is the micro Russell 2000. And those are just divided by 10, right? So if you want to trade S&P futures, you don't have a $13,000 account. And please, if you have a $13,000 or a $14,000 or a $15,000 account, do not be trading full S&P futures contracts. Like, you don't need to. I mean, you're levered up almost 100% at that point. And this is more what I would call a sophisticated instrument where if you don't understand the complexities of it, you can get margin called, and that will not be good.
Destroy your account. Blow up your account.
But I mean, if you divide it by 10, you can do the MES, right, which is 1,320 for a contract. Yep. It's like, I don't want to say most, but a lot of people can afford that and afford to trade that without overexposing themselves.
That's definitely micro contracts. Yeah. All right. That's an interesting. I didn't even know that was a thing. Definitely gonna look into that. That's pretty interesting. So I guess you're really knowledgeable about futures and stuff like that. When it comes to your success, when you find the thing that you really like to do and you like to, let's say you trade, do you want to focus yourself over, trading options, trading futures, and like broadening your approach, or do you kind of want to focus on one niche and get really good at that?
Definitely focus on one niche and get very good at that. I want to double down on my strengths and, for lack of better terms, say F my weaknesses, right? I understood that, equities just really wasn't that exciting for me. Back then, I didn't have that large of an account. So like trading a couple shares here and there of these stocks just wasn't that cool. I moved to options. It didn't really work out. I made some money, lost some money. We all pay tuition in the markets, right? But once I hit futures, it was like a perfect balance of like what I could make in trading and then how I could manage my risk in trading. And once I recognized that, I have friends who trade, all the instruments, and they're just, I would say, significantly smarter than me. But for the average person is like, especially if you're just starting out, is find that one instrument you want to trade, whether that's, equities, options, options spreads, because you can trade different techniques of options, I guess. It's strategies is what it's called, right? Which we won't get into that, but futures, pairs trading, Forex, things like that. Is find that one thing that fits, that has a healthy balance for you, and then double down on that. Try to learn from all the greats who traded in that instrument. Commodities is futures trading, right? Is like I'll read everything Ray Dalio. I'll listen to a ton of the people on Market Wizards, and they came up in commodities trading. And I'm like, oh, there must be something to that if they all did that and didn't trade options or something like that, right?
Yeah.
But I definitely caught traction when I kind of pushed options away and didn't even go on my options account and like solely focused on futures. When that was the case, I didn't need to scroll through 25 to 50 different stocks that I want to trade options on. I'm literally scrolling through like maybe 7 futures contracts.
Yeah.
And if they don't hit my levels, like I'm not trading them. Simple as that.
Yeah.
Like it gets kind of boring sometimes, but that's how you make money.
Want the right levels for entry, for sure. One thing I want to highlight what you said, I don't know if everyone caught that, but you said that your friends who are much smarter than you that trade all these instruments, I think something super important is to surround yourself with people that are smarter than you. And it's even impressive to hear you say that, because people say that all the time. They preach it, but they don't actually do it. And I think that's definitely one thing I experienced when I surround myself with people that don't challenge themselves, aren't that, try not to excel at their one niche. It definitely makes a difference on you. You're the aggregate of the 5 people you spend the most time with. So that was awesome to hear you say. But
valid.
Yeah. But that's it for today. That's it for the 3rd episode of the SteadyStack podcast. Thanks so much, ObsidianApex, for coming on and doing this and sharing your story, strategy, and success. Next week, we'll have another master stacker on. Stay tuned to see who it is. More value and utility coming from the SteadyStack community. So stay posted. Peace.
Cool, man. Thanks for having me.
Thanks.
See ya.